All right, so the big question, demo trading or live trading? And I have to say that this is a very, very common question that gets asked all the time, especially by those that are in need to build experience in the market. If you're new to trading, do you jump straight to your live account, or do you prefer to first gather experience through a demo trading account? If the latter, if demo trading, for how long are you going to be demo trading? What should be the process like that is going to guarantee that you continue to take the necessary steps in your learning curve, while at the same time you make sure that you are simultaneously moving towards your goals, whatever those goals happen to be, right? Now, this chat that I'm going to have today with you is going to reveal absolutely all of it in terms of how I perceive this topic of conversation, and hopefully it will clarify things from the very get-go, okay? Independent of what level are you at and how many years you've been trading the markets, okay? So here's what I tell, first of all, my younger self when starting to trade. If I could go back in time, really this is what I would share with my younger self. I would try to find as much time, here's the recommendation, I would try to find as much time as humanly possible from, out from the gates to gather enough in sample via backtesting, while simultaneously pick a time of the day to trade the strategy in live markets. I repeat in capital letters, live markets with a live account with a very, very small amount. Say, for example, $100 or $200 perhaps, depending on your situation, okay? Every single person, every single trader is going to be different, but a very insignificant amount of money, yet live account. Now, why? Why going straight into your live account? In my personal opinion, a demo account cannot replicate the experience nor the emotions of live trading, period. Once emotions get in the way, you're going to notice that a plethora of reasons from, let's just say, from fear of losing, fear of pulling the trigger whenever you know that you have to, revenge trading, etc. All these aspects are going to be kicking in, which can easily can take us off course, can derail our focus from where it needs to be and how we're supposed to be behaving and acting as traders, okay? And that is why, if within your reach, even if it's going to be with an insignificant amount, as I just said, I recommend to start with a live account. The more, and pay attention here, the more I've thought about it, the more really I realize over the years that demo trading can reinforce bad habits, because those emotions and really the whole psychology behind trading is just not there. You have a detachment because that money is not real, okay? So on one hand, to recap, you'd be backtesting the strategy, while on the other hand, you'd be trading it live with an amount that means very, very little to you, yet it creates the type of emotions that you need to experience, okay? And if that can be from day one, even better. And this way you can accelerate your learning curve massively. You just simply are going to be moving through your learning curve at a faster rate in building your skills. So, why wouldn't you want to do this from the moment that you start, taking up this challenge? Just, a suggestion, just make sure that you make a proper distinction when to be dedicated to either activity, either it is backtesting or live trading, because it should have your 100% attention, okay? You really need to be present in the moment in either activity, okay? The more you trade live while backtesting, the more room to further optimize the strategy, the more that you can actually calibrate, find tweaks, select the markets that you feel most comfortable with while still gaining exposure and experience when trading. Okay, now as a rule of thumb, this is not going to be fixed in stone, but as a rule of thumb, I'd say a minimum of 3 months would be required before you start really to consider cranking up the amounts. And I'm actually going to be giving you a bit of a process on how I would approach that if I were to share that with my younger self. So this is the time, these 3 months, that you have to make all the mistakes in the world. You have to identify these mistakes, do something about it to gradually eliminate these mistakes out of the equation, know yourself better as a trader, and so on. Okay, so these 3 months at the very minimum should be super critical. You should stay on this small live account for as long, and here's what really I would tell my younger self: stay on this small insignificant live account as long as necessary until your results start, you start turning a corner and you start becoming a bit more consistent and learning to control your risk adequately, which is going to be critical. It's not just about the entry, it's about all the pillars that I described through this course. Okay, once you've built enough confidence and you start seeing, as I said, that the results are on your side, then give yourself permission to increase the capital that you're going to be putting at risk, that it's going to be on the line, whatever amount that is. And then, gradually keep increasing the risk in marginal monthly steps, as long as conditional to your results proving profitable during this period. I would consider as a reference monthly results for you to really give yourself permission. And just make sure that your transition from a small to gradually a bigger account, it's in gradual steps. Okay, it's very important, this wording, gradual. Okay, do not jump from small to big. Okay, and always find a way to really justify these steps. Okay, in other words, let your results be the ultimate evidence to up your risk and capital that you are going to be trading in your account. Now, if you are if you're well versed about the markets and you've been able to gather some years of experience in the past, then there is nothing wrong in not just jumping straight into live account, but also with some extra capital. Let's just say, for example, if you obviously have the financial capacity, $1,000 or so for, then you would then make sure that not only money is on the line, but it's money that perhaps makes a bit more meaningful for you to be fully engaged in the activity. Okay, now what I would personally recommend, even if you're a more experienced trader, is that the sum of capital that you initially put at risk doesn't represent more than 0.2 or 0.25%. Okay, so let's just say 0.2% for argument's sake. Okay, it should be a symbolic sum, and that should always be kind of like your lower bound in terms of how much you risk. Now, if your month is positive, then you double that to 0.4%. And then you apply the same logic by adding or subtracting 0.2% depending on if you are positive or you are negative for the month, until you make it to 1%. So that would be a multiple of 5. So from 0.2, if you are successfully trading the strategy for 5 months, you go into 1%. And once you get to 1%, that's your upper bound and the risk that you stick with from then onwards. Okay, you do not go above 1%. For the majority of you, hopefully you would respect. I know that some might want to crank it up because the results prove so. If that is the case, let's have a personal conversation, you and I, and perhaps we can discuss how you'd like to go about it, and I can give you my most honest opinion based on the experience that I gather in this strategy. Okay, so bottom line, by applying this logic that I'm giving you, you will make sure that you keep learning the strategy, its intricacies, and you continue to accumulate the experience, when at the same time you're making sure that from day one you're not going to be risking like 1%, which I would say is a bit too much. Okay, now let me tell you, this approach for the more experienced ones I believe to be a great challenge, a great motivator, as one naturally would want to reach that 1% threshold to really gain exposure to more capital in the line, but at the same time you need to earn I repeat, you need to earn the right first to be putting that capital on the line. So you would be very much dedicated so that in order for you to transition from that 0.2% all the way to this 1% that I am suggesting as the upper bound of the risk threshold. All right, so with that, I would conclude today's lesson. Remember that at the end of the day, it's going to be a holistic approach, how you're going to be approaching your, making these baby steps as a trader of the TT pattern. And basically this means that, number one, without mastery of your psychology aspects, is going to be a futile exercise, but at the same time, similarly, having an excellent psychological control without the conviction of applying the edge is also going to be defeating the purpose. And that is why I am suggesting that from the get-go you do live account while at the same time you are backtesting the strategy, because through these actions you're going to give yourself the best shot possible that from the get-go you are following this route that will make sure that you are both gathering more experience psychologically wise, because you're getting exposure to the live markets, while at the same time you are building up that determination on the pattern via the backtesting. All right, so with that being said, I beg you all due, and I'll see you with more lessons in the next video. Cheers.